Happy New Year, everyone. Yes, it does get a little bit old saying Happy New Year as we're into the middle of the month, but I do need to confess that I was away last week. I would have normally had this out by last week, but being away, I obviously didn't get this done. So we're doing it this week instead. And you know what, I usually go away at this time of the year on purpose. It's a great time to get away and reflect on the year and to sleep a lot, which I do, to recharge my batteries and be ready to go for the new year. It also gives me a little bit of time to do some reading. I was doing a little bit of reading last week, reading the Matthew Perry book, Friends, Lovers, and the Big Terrible Thing. I don't know if anybody has read it. But it's quite a good read. But I'm not here to talk about reading and vacations. I'm actually here to talk about the market and what does it look like? Where is it going? What does it mean? There's a lot of headlines out there right now, and it is really making it difficult to do the sift and sort and really weed through it all and understand what it all means. So I thought I would raise a few points here today and just go over a few things and try to shed some light on what I think about where things are going, and also to give you maybe an overview of year over year 2022 to 2023 in our key market areas of Erin, Hillsburgh, Guelph, Eramosa, and Halton Hills. So in our key market areas, Guelph, Eramosa, Halton Hills, and Erin, Hillsburgh, what did 2023 look like? Well, most of you have seen the headlines and are aware of how the impact has happened. We saw those rate hikes continue as every announcement came out. There was a shift in the rates. And as we saw that, we saw prices starting to shift downwards, and we saw buyers moving to the sidelines. And it became a bit of a challenge to see where the buyers wanted to pay for something versus what a seller wanted to sell for. So getting that connection at some times was a very big challenge. The last quarter of 2023, I think we saw one of the slowest and quietest that we have seen in quite a few years. Now, as we head into 2024, we do have another announcement expected for the end of January, and I suspect at this point we're going to see those rates hold. 2024, I think we might see some softening those rates in maybe into April, into the second half of the year, which may bring some of those buyers who have been sitting on the sidelines back to the table, willing to participate in the market again and bringing some confidence back into the market. I do think as well that we have already seen an increase starting into the new year, which I think the new year always brings new life, new hope, new vision. And I think that we've seen some of the showing activity increase on quite a few properties, which is showing that there is some movement and buyers coming back maybe even before the spring market. One of the things I think we also had to get used to was, what is this new normal look like? You know, we've had to get adjusted to these new rates. We're not going to see those record low interest rates probably for I don't know how long, but it will be quite some time, if ever, that we see those rates again. So it's been an adjustment phase for everyone, and we're finally starting to get there, I think, as an overall big picture. And even Royal LePage is actually forecasting a 5.5% increase in the average price year over year for this year. So I think that's also a positive outlook, and we'll see how things play out as the year goes on. So just to finish up here, I wanted to talk a little bit about what happened 2022 to 2023 in our key market areas, Erin, Hillsburgh, Guelph, Eramosa, and Halton Hills. Now this is for detached homes, okay? So the number of units sold in 2022, we saw about 850 homes sold that year. Now in 2023, we only saw 761 homes sold. So that was a decrease of almost 90 units. So that's a pretty big sway, I think. The other thing we also saw was a decrease in the average sale price. Went down about 11.3%, down to about 1.23 for your average detached home. No surprise to anyone, we saw the average days on market increase last year. I've been giving you those updates monthly as well, and we went to about 24 days on market to get sold, an increase of about 6 days over the previous year. And I think still, when you really look at it, 24 days on average to get sold is very manageable and a comfortable time frame. Again, these are just averages, but to give you an idea, I think that's very realistic. We also saw a decrease in the list to sale ratio. It actually went from an average of about 105% in 2022 down to 98% in 2023, so a decrease of about 6%. But if we remember what happened in 2022, the first quarter of 2022 was pretty strong. We were seeing multiple offers still, and still the heated market. So a lot of the pricing then was actually selling over asking. It was only in that last part of 2022 that we started to see the push downward, prices started to come down, and the change in the market. So that's why that year still shows pretty strong. So these numbers I think are a tiny bit skewed, although they do show the picture year over year as to what those numbers really are. Now, if you want to know what it's like for your particular property and in your particular market area, then give us a call. Happy to go through that with you and help you understand where things are at. And as a buyer, helpful to get some information here and understand where things are at if you're in the buying seat. So give us a call. Our team is always here to help. And thanks for watching. Have a great day.